My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be with my friends, just trying to make a little money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. All right, listen to me. We should have been down today. Sell. Right? Yeah, we had a darn great run. Dow jumping 500 points, S&P gaining 1.61%, NASDAQ pulling 2.1%. All right, how do we explain this obviously bizarre action? Every morning I do this memo. It's called What I Am Looking At. It's for the Investing Club. Do you know I counted 29 negative research notes out of total of 34 today? I'm telling you, that's insanely gloomy. So you got to ask yourself, what made this rally possible if all the research was negative? I like to start with the usual suspects when I try to figure out why something happened that wasn't supposed to happen. First, you check the bond market. Bonds have been driving the bus lately with the relentless declines, right? Nothing different there today. Bonds were down again, sending interest rates higher. Very rare to see stocks rallying when that happens. Wasn't the market supposed to go down? Then you check the earnings. Mixed bag, nothing remarkable, though we did get a nice bump from Johnson & Johnson as its numbers, particularly in medtech, showed a positive reversal of fortune. But that stock was down 8 when I came in here. Nut. Idiots. The people who sold. J&J is splitting itself up, and there's a lot to like. But it's not powerful enough to drive the whole market as much as I like the company. Housing starts standing. I don't know. We got a large multifamily build, but less single-family home construction, which is, of course, what you'd expect with a 30-year mortgage rate of 5.3%. Again, nothing groundbreaking, nothing sent us up. Ukraine? Russian Foreign Minister Sergei Lavrov told the Indian media that his regime isn't interested in nuclear war. You might think that's a positive, but this is the same guy who said Russia wasn't interested in invading Ukraine right up until the day the invasion happened. So let's take this with a Euro mountain of salt. Finally, did we get a break in commodity inflation? Not really. Today, the grain complex flirted with multi-year highs, frightening throwback to past famines. Sure, oil and natural gas were down, but then again, they spiked. So I wouldn't read too much into that. Inflation's still raging. No wonder James Bullard, the president of the St. Louis Fed, made a case for taking the Fed funds rate to 3.5%, which requires 75 basis point hike at the May meeting if they're going to get there on time. Again, bad news for the stock market. So if the usual suspects all have alibis, what can explain today's unexpected rally? Well, first, there's sentiment. We came in oversold, minus 3.7% on that, minus 3.7, I'm sorry, on that oscillator that I always talk about, the S&P 1, I pay for that. Numbers matter. When the oscillator's that far into negative territory, it's harder for the market to plummet. More important, the American Association of Individual Investors poll just came out with its most negative sentiment reading since September of 1994. That date sticks in my head because as a hedge fund manager back then, I was faked out by how much the Fed could hurt the stock market. 1994 was the year the Fed nearly doubled rates. They'd taken the Fed funds rate from 3 to 5.5, including 2 double rate hikes and 1 triple rate hike nightmare that spooked everyone out of the market. But 1994 was also the year that the great bull market of the 90s got rolling right at the end. It was as if stocks had been stuck in a rut until the most aggressive Fed tightening cycle imaginable happened, and it turned out to be a magnificent buy opportunity. Hey, they whipped inflation. It's one of the best in history. I always talk about how important it is for the Fed to engineer what's known as a soft landing for the economy rather than triggering a recession. Back in 1994, the plane landed perfectly despite the crazy man-made turbulence. According to Bullard, even though the Fed's behind the curve this time, they can still land the plane safely without triggering a recession. Yet sentiment is as negative now as it was in the darkest days of 1994. That doesn't necessarily mean you're seeing a sustainable bottom, but it's pretty encouraging precedent, don't you think? It's also a good reason not to freak out when you hear these Fed officials talk about how we need a series of ruthless rate hikes. The second driver of today's rally is something a little more ethereal, hard to get your arms around, particularly for a dollar sign represented by a man, which is me. I don't know if there's a politically correct way to say this, but America has a whole lot more to offer than any other nation on earth. I think we tend to underestimate our advantages, even as those advantages often come in spite of the U.S. government, not because of it. What do I mean by advantages? Listen, if you live in Europe right now, you're beginning to feel the pain from a lack of natural resources, coupled with some tremendous policy mistakes over the past decade. Starting in May, Europe will have an oil shortfall of 3 million barrels per day. At the same time, governments like Germany are basically financing Russia's war of aggression by continuing to purchase Russian oil and gas. But America's not like Europe. We've got more natural resources than we know what to do with. A decade ago, we produced 6 million barrels of oil per day in this country. Now we're producing more than double that, and we could significantly increase our output in order to help out Europe if we wanted to. According to Russia Brazil, our favorite fossil fuel expert from RBN Energy, we could produce another 1 million or 2 barrels per day and still have, amazingly, enough port capacity to ship it overseas. Someone was thinking ahead. At the same time, we have a 100-year supply of natural gas. In short, people, we are blessed. We're not hostage to other countries for our natural resources, which is a gigantic competitive advantage. Remember that class at college or high school? Who knows what kind of numbers European companies can put up given their insanely elevated energy costs? Sure, our gasoline prices are big, but Europe's got an honest-to-goodness energy crisis. All right, so how about China? For years, the People's Republic of China seemed to be running circles around us economically. Their authoritarian dictatorship embraced capitalism, pursued very smart industrial policy that allowed them to grow like crazy. But now the Chinese economy is seeing the downside of living under a dictatorship, isn't it? Aside from the countless human rights abuses, which go without saying, I'm talking about China's COVID policy, because their government refused to use high-quality Western vaccines. Nearly everybody in China got homegrown vaccines, much lower efficacy. Think our flu vaccine, when you get the flu anyway. So now they're locking down vast swaths of the country to prevent COVID from spreading. They have what's known as a zero-tolerance policy. Here in America, we have a max-tolerance policy, especially if this latest judge's ruling that gets rid of the mask mandates in airports and planes. When nearly everybody's been vaccinated, business should be able to go back to normal. But because the Chinese government refuses to use the good stuff, COVID is much more dangerous there than it is here. So they're adopting insanely draconian policies to stop the spread, like it's still 2020. I say democracy 1, totalitarianism 0. Now, these comparative advantages haven't changed overnight, but we have to accept that the gulf between the United States and nearly every other industrialized country grows by the day. We don't have a belligerent nut job of a president who's trying to commit genocide against his neighbors like Russia. We don't have hundreds of millions of people in COVID lockdown like China, and we don't have a serious energy shortage like Europe. Sure, we got higher flank steak prices, more expensive cornflakes, bigger gasoline bill, but we also have much higher wages to combat the pain. And who knows, maybe tomorrow the focus could be on the horrendous shortfall of Netflix and abysmal decline, future bad forecasts. But we need to remember that unlike when I was growing up, our competitive advantage is no longer just Hollywood. The bottom line, I say America has the edge on the rest of the world, and that's the secret sauce that explains a great deal of today's actions and the additional gains to follow. Edward in Massachusetts. Edward.
Hello, Jim. Thanks
Edward.
for taking my... Do you think Costco's earning multiple is sustainable?
They have a team at Costco that is second to none. I think that as retailers go, when you're thinking about Craig Jelinek, who we met, remember we went to see him? When you're thinking about Rich Galanti, who runs the calls, maybe the smartest CFO in the world, what you'd say is, you're right, it's not sustainable. The multiple's going to increase. This level's too low. Dino in Michigan. Dino.
Hey, booyah, Jim. How you doing?
Booyah, Jimmy Chill says. What's up?
Hey, doing great. Thank you for everything you do for us investors.
Oh, thank you. Thank you.
Hey, I'm calling in today regarding Okta and getting your thoughts on the way they handled their most recent security breach and if you think they can recover or is it time to jump ship?
No. I mean, we had a co-CEO guy on founder on this morning on Squawk, and I thought he did a good job. And when Todd McKinnon comes back on, I think he'll have a better story to tell. Hey, listen, Zendesk talking about a deal. When we go out there, when we're out west, listen up. These companies are the future. Don't give up on Okta, even if you are like me and like Palo Alto. Better. And same with CrowdStrike. Kathleen in New York. Kathleen.
Hi, Jim. Thank you for speaking with me.
Of course.
Well, with inflation rising and rates, isn't it positive for a buy now, pay later company like Affirm, but they don't advertise, and a lot of people don't know what their services are. Last part of the question is, why are there quite a few class action lawsuits? If you could shed some light.
Well, I will point blank say that class action lawsuits are frivolous because this man, Max Levchin, has done everything he can to be able to make money. But when rates rise and other banks get in the same business, all of the companies that look like Affirm go down. So it's not necessarily Affirm. It is the cohort. But thank you for the question, Kathleen. Now, America's got the edge on the rest of the world, and that secret sauce can often explain a lot of today's action. You're going to hear more about this pretty much for the rest of my life because I think we denigrate our own country way too much. On Mad Money tonight, Plug Power stock jumped today after announcing a new agreement with Walmart to provide the mega retailer with green hydrogen, you know, my favorite kind. And I'm learning more about the deal with the company CEO. Then after reporting a top and bottom line beat for the quarter, I'm getting to the heart of the report with the CEO of Bank of America, and you know I thought it was a beaut. And Prologis rallied today once again after highlighting record demand in the real estate space. I'm crunching numbers with the best warehouse company in the world. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.